Many investors view healthcare as a defensive sector with good growth potential, but it has underperformed the wider market this year. Joining us now to discuss what the key drivers could be going forward is Jackie He, VP for Portfolio Research with TD Asset Management. Jackie, great to have you back on the program.
Thank you so much for having me, Greg.
All right, so when we talk about this underperformance of healthcare against the broader market, what are the drivers of that?
Well, that's interesting. Never short of headlines, as you said, in other sectors. But if you look at Q1, the sector actually outperformed. But interestingly, all those outperformance was given back over the past couple of weeks. Why so quickly? It's not about any drug trials. It's not about earnings. It was all about the policy risks that has evolved very quickly over the past couple of weeks. So think about last week, the One Big Beautiful Bill just passed that's talking about funding cut for Medicaid. Then we have the Most Favored Nation pricing framework that's signed into executive order later this month. That's talking about significant drug price cut. And then you have the tariffs, right? Like it's unlike the one that got blocked by the court last night. The sectoral tariffs still remain in the place, and that's coming for the pharmaceutical industry. Last but not least, we know the FDA has undergone a pretty major restructuring. That created some uncertainty for future drug approvals. So that's what created the volatility.
There's a lot going on there. Maybe we start breaking them down. That One Big Beautiful Bill, there was, it's a big bill. There was so much in there that people have been parsing out different pieces of here and there and what it means for investments. What does it mean for the pharmaceutical sector?
Yeah, it is certainly big, as you said, but not beautiful for the healthcare companies. Interesting, if you look at the U.S., half of the healthcare spending is funded by the U.S. government. And now the bill is talking about cutting that funding. So I think the bill is negative, but it's not incrementally negative relative to expectations. I'll explain why. So 3 points I'll make is one, you think about Medicaid. The bill does talk about 700, 800 billion savings. So you annualize that, that's about 8% or nearly 10% annual cut. For the Medicaid. But if you look underlying the drivers, the saving was really about lifting the eligibility requirement. For example, if I'm able to work, I need to work like 2 weeks per month to be eligible. Interestingly, there's nothing mentioned about the pricing cut despite the recent executive order. So that is a relief to the industry. Second point is on Medicare. The bill didn't say anything specifically about Medicare cut, but the massive tax reduction will increase federal deficit that will automatically trigger of about 4% annual cut for Medicare. Will that go through? I don't know, because historically, the Congress tend to approve a waiver for the Medicare program that's more political sensitive. So regardless who controls the Congress, right? That happened in 2017, that also happened in 2021. So the last point I want to make is the tax rule changing, right? We talk about the tax cut, regulatory burden reduction, they all benefit to all corporations. What's specifically interesting for healthcare is the R&D spending. So the bill allows the companies to expand their R&D right away instead of spreading out over 5 years. So for an industry that spends 20% of their sales on R&D, it is definitely a positive, some upside there.
All right, and you break down the details in there of that, as you said, very big bill. Another headline, lots of headlines around the space. Yeah. Most favored nation pricing. What do we know here and what do we not know?
Yeah, so most favored nation, MFN pricing simply means the U.S. wants the lowest drug prices that are offered to any other peer developed countries. Right? If you think about the drug price, U.S. drug price is about 3 times higher than the peer developed countries. That's a big number. So to align with others, we need to cut down the price by 70, 80%. That's a lot of number, right? So if you overlay that with about 30% of industry revenue come from the U.S., we are talking about 20% industry top line headwind. So in reality, it's not that scary because we cannot simply compare a gross drug price to net drug price in Europe, right? And on a net basis, because U.S. has a very massive rebate system, that's effectively means the drug companies offer a big discount to those gross price. So on a net basis, the drug price is still higher in the U.S., but at a much lower spread compared to other countries. That's pretty much about the most favored nation. But the thing important is, I think the Trump administration make it clear it's not, this time will not be pharmaceutical industry bear the whole cost burden. So they talk about asking European countries to share more R&D cost. They talk about eliminating PBMs, that's pharmacy benefit manager. As a middleman, so they take about 25% of the drug price. So put them all together. So we should expect the drug price to come down, but the magnitude may not be as bad as the headlines suggest.
All right, lots of headlines, lots of executive orders to keep track of as well.
Yep.
About 2 weeks ago, there was an executive order signed that the pharmaceutical stocks started to rally. What happened there? Did they sense the risk was behind them?
Yeah, it's interesting. So they did sign the MFN pricing in the executive order. So market look at it saying, oh, that's a bunch of nothing because it lacks of enforceable details. So people think, okay, it's probably not as bad. I wouldn't hold my breath to that optimism yet because we don't know whether the administration is leaving that enforceable detail on purpose to open room for negotiation along with the other policies like trade, tariff, all those things, right? But I think if you look at history, it may be helpful. So back in the first Trump administration, he actually signed something very similar to mirror U.S. drug prices to about a basket of 16 peer countries. And that executive order got rejected by the court by the end of 2020. Right, and then it was rescinded by the Biden administration in 2021. But you look at the underlying reasons for the rejection, has nothing to do with the constitutional concerns like what we see for the liberation tariffs. It's more about the procedural issues. So the Trump administration didn't have time to follow through, which is clearly a different scenario in today's case. Another thing is about, this is the first time the administration is taking drug prices at a bigger and broader negotiation along with other countries. So we'll see how that play out. Will European countries pay more drug prices so US can pay less? It will be very difficult, but it's not completely impossible. Just remember in the first Trump administration, he did successfully push NATO countries to increase their defense budget. So it sounds like a similar playbook.
Okay, when you start talking about trade, I start thinking about tariffs because that's been the preferred tool heading into trade negotiations. My understanding is drug makers didn't hit with the tariffs straight off, but there are still threats hanging over them.
100%, Greg. So tariff was never really a topic for pharmaceutical industries because it was well protected under WTO since 1994. And also people don't worry about it because it's so profitable. These drug makers, we're talking about 80 to 90% gross margin, right? If you're for $100 drugs, like the cost to make that drug only costs you $5. If you apply 25% on that $5, it's only give you $1.25 headwind. So it's not a big deal. Why it can be a big deal this time? Because the industry will no longer be protected if it's proven to be a national security reasons. We'll see how that will play out. And the more important thing is something called transfer pricing. So we know, interestingly, you'd be surprised, like the drug companies, big pharma, haven't paid a lot of taxes over the past decade, like to the US government, even though US gave them most of the revenue. The reason being that they allocate their drug patents to those lower tax countries. So when they import those drugs to US subsidiaries, they apply a very high cost to those drug patents. So that allows them to reduce those taxable income in the U.S. significantly. In fact, they are shifting the U.S. profit to elsewhere, right? So the tariff, if that applies to those patent costs, that can be a very significant headwind. So the offside of that is we are seeing the pharmaceutical companies seems to be doing what the administration is asking them to do, like making massive investment and shifting those IP back to the U.S. That could offer them some leverage when it comes to tariff negotiations.
A lot going on in the space. You've laid it out nicely for an investor thinking about positioning in the sector, stock selection. What do they need to keep in mind?
Well, I think the overhang will continue. This is a sector you have currently more unknowns than knowns. If you draw a comparison between today's healthcare versus like 2021, when Biden's Inflation Reduction Act was first introduced, you may conclude this is a great opportunity to buy the stock because it outperformed the market in the following year. But I want to remind people is the broader market got hammered by the inflation surge and the rate hikes in the following year. That's why healthcare outperformed. But if you compare today's scenario versus 2009, when Obamacare was first introduced, healthcare sector actually underperformed for multiple years before a real rebound happened. So overall, I'm still relatively cautious for the performance because of those overhang. On the other hand, I do think investors should pay extra attention to the stock-specific stories. This is a sector that has a lot of idiosyncratic drivers, right? A lot of innovation going on. Companies have different patients, different drug trials, different pipelines, right? So I would pay extra attention to those companies with very proven commercialized portfolio, with a very healthy and promising pipeline, which means drugs coming to launch, and also less policy risk exposures. So that's how I think about the sector.